I think we've already done the 4-year cycle. We've already hit the bottom or near the bottom of retail sentiment. We've maybe speed run through the bear market and we're ready for this new institutional phase. But more than anything, I just think we're in for a slower churn upwards. And as institutional demand progressively moves into the market, I think that is the dominant theme. And that's like its own 5 to 10 year cycle. And I think that's what we're going to be in. Of course, there's volatility. We're living through it now, right? We're off from 125K to 100K, but we're still at 100K.
After a pullback from its all-time high of approximately $126,000, Bitcoin has stabilized around the $103,000 to $105,000 range in recent days, reflecting ongoing market volatility. Despite this, the price remains strong relative to historical levels, supported by a market cap surpassing $2 trillion. Analysts suggest that if the $100,000 level holds, Bitcoin could resume an upward trajectory, with forecasts reaching as high as $123,000 and above by mid-November, based on growing institutional interest and positive market drivers. However, caution remains as short-term price swings and a lack of sustained volume keep the market sensitive to further corrections. Within this context, there is a growing consensus that the well-known 4-year Bitcoin cycle has likely concluded its latest phase. The market appears to be transitioning into a longer-term phase dominated by institutional investors gradually taking the lead. This change is expected to create a slower upward climb rather than rapid spikes. Institutional involvement is increasingly viewed as a stabilizing force, which signals the start of a new multi-year cycle centered on sustainable growth and strategic accumulation. In a recent interview with Coinage, crypto expert Matt Hougan explained that this evolution marks a critical juncture where Bitcoin is maturing beyond retail-driven hype into a more institutional-led era. So the real question isn't whether institutions will continue buying. It's what happens when Bitcoin becomes too integral to the system to ignore, regulate away, or reverse. Let's take you back to Matt Hougan's latest market analysis, where he delves deeper into these structural shifts shaping Bitcoin's next great chapter. Please like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for tuning in. Enjoy the rest of the video.
Of what you're making of the sell-off and how you think people are doing in navigating it right now.
Yeah, well, I think the answer to that depends on which people you're talking about. If you're talking about retail crypto Twitter, there's extreme levels of bearishness, extreme levels of even depression, I would say. If you're talking about institutional investors, there's relative excitement and no panic at all. They're looking at an asset that is up significantly on a 1-year basis. I think Bitcoin's still up 30% over the last 12 months. They still see it in a bull market. They're still buying. So institutions are looking at this more with like sort of a calm opportunity. And I think crypto retail sentiment is really down at the bottom. My own view is that Bitcoin tripping along sideways here around 100K is a gift. I think it's an opportunity to stack sats. I think it's an opportunity to build positions. I think the long-term trajectory is up and to the right. It's just a matter of time until we get there. I think the thing that people are worried about, particularly on the retail side, is whether there are more bodies to surface from the big deleveraging washout and sort of the concerns around vaults and hacks that we've seen recently. I think either a major body surfacing so people can get that out of their system, or the passage of time, let's say 4 weeks with no major hacks or no major other issues, will help us sort of clear that out of the system. One reason I think crypto retail is on the sidelines is that they're not sure that that process of figuring out what happened during that deleveraging process and whether there were major institutions that were harmed. I think that is continuing. So if we can resolve that one way or the other, I think that would be sort of the bottom of sentiment and the opportunity to rebuild. The other opportunities that I see for sort of positive catalysts is, I think, progress on the Clarity Act in Congress, or rising expectations that we're going to have progress on the Clarity Act, is a upside surprise that's coming to the market, and I think could give us a reason to rally. Similarly, I think if the market starts pricing in the probability of more rate cuts, if we sort of peel backwards from the hawkish tilt we heard from the Fed at the last press release, I think that could give a bid to a market. So whether it's rate cut expectations, Clarity Act, or just retail getting past their worries that we haven't seen all the downstream effects of that giant deleveraging we had, I think those are the things that would sort of signal the bottom and start to push us upwards until the end of the year. I think the market is still digesting it. I mean, I do think that's one of the reasons why sentiment is still so bearish. I think the market is wondering how many people with leverage positions tied up in the market still have to unwind those positions. I think they're wondering if any major institution took it enough on the chin that they'll be severely challenged. I think the answer to those questions, for what it's worth, are there is still some unwinding and deleveraging that needs to happen, and some small hedge funds that probably are being wound up and need to be moved out of the market. I don't think there is a major institution that was severely enough damaged not to make it through, but there's certainly a risk of that. And I think people just, it's hard to know, even for someone in my seat, which has the benefit of having a lot of contact with these type of firms, it's hard to know if we've fully gotten to the bottom of that. And I think that uncertainty is what's contributing to maybe retail sitting on the sidelines and not buying this dip as aggressively they have previous dips. Look, I think the expectation around an alt season should be one of differentiated returns. I think the era where alts all rose together and any alt was a good alt and the more risky, the better during bull market blowoffs is no longer the case. And I think you can see a little bit of this in the relative flows we're seeing between, let's say, the new Solana ETP and the new Litecoin ETP, right? People are differentiating on what they're more excited about. And I think that will be true going forward. We're going to see a lot more quote unquote altcoin ETPs. Some of them will do exceptionally well. And I think they'll be driven by strong community interest and strong fundamentals. And some of them I think will fall completely flat. I think we're just going to see a broader dispersion of returns in alternative assets as we move from the speculative phase of crypto to a more fundamentally driven phase of crypto, from the retail driven phase to the institutional phase. I think that means more distribution, more differentiation, and an era where fundamentals matter more than they did in the past. I think this cycle will be different. I think it will be slower and grindier, but still a lot of significant upside. To make that comparison between sort of retail OG investors rotating out and institutions rotating in, you could give the example of like tech stock IPOs. Jordy Visser wrote a great piece about this. You could look at Facebook's IPO. Facebook IPO'd at $38 and then traded down for 15 months before it got back to $38. Today it's at 635. What does that tell you? It tells you once you work through this distribution phase where the early insiders sell to some of the institutions, there can be enormous amounts of upside for those that hold to the other side. So I would, my word to retail investors is like we're at inning like 3 of Bitcoin's growth. We're at inning 1 or 2 on ETH and Solana. We're in the pregame for some of the other more interesting alt assets. There is still a lot to go after this handoff. It's just going to be different than it was in the past. It's going to, I think, look more like a ladder and less like a trampoline. But that can be great for your portfolios as long as you have the right time horizon and as long as you have the right portfolio sizing. You can. There's still a lot to go. It's just maybe less volatile than it was in the past. I think the 4-year cycle is dead. I think the reasons we had the 4-year cycle are just no longer as relevant, right? The halving is half as important as it was 4 years ago. Interest rates are going down. They went up in 2022. They went up in 2018. So they're working in a different orientation. Blow up risk is lower this time around than it was in 2022 with FTX, in 2018 with ICOs, in 2014 with Mt. Gox. So the reasons we historically had those resets on a quadrennial basis are just either inverse or no longer very relevant. At the same time, you have this institutional bid. If anything, I think we've already done the 4-year cycle. We've already hit the bottom or near the bottom of retail sentiment. We've maybe speed run through the bear market and we're ready for this new institutional phase. But more than anything, I just think we're in for a slower churn upwards. and as institutional demand progressively moves into the market. I think that is the dominant theme, and that's like its own 5 to 10 year cycle. And I think that's what we're going to be in. Of course, there's volatility. We're living through it now, right? We're off from 125K to 100K, but we're still at 100K.
The crypto market's recent sell-off reveals a sharp divide between retail and institutional investors. Retail sentiment is very bearish, with many feeling uncertain and downbeat, reflecting concerns over the aftermath of a major deleveraging event and fears about potential additional institutional damage or hacks. This has caused retail investors to step back from aggressively buying dips. In contrast, institutional investors remain calm and even excited, viewing the current prices as an opportunity. Bitcoin, despite recent drops, is still up around 30% over the past year, and institutions continue buying, treating it as a long-term bull market play. They are adopting a strategic approach, diversifying into staking and regulated products, signaling a shift from speculation to fundamentals. Uncertainty remains over how much deleveraging is still unfolding and whether all risks have been fully realized. Positive catalysts like clarity on regulatory acts or shifts in rate cut expectations could help restore confidence and push the market up. Altcoins will likely see more differentiated returns based on fundamentals rather than broad speculative rallies. According to Matt Hougan, the crypto cycle now appears slower and steadier, with institutional involvement growing and volatility potentially decreasing over time.
Well, I mean, look, I think the market has it wrong on future rates. That's a big thing to say for me because I trust in markets a great deal, but I think it's very short-termism. I think the Trump administration wants lower rates. I think they've politicized the Fed. They want to install a new Fed chair that's going to be more dovish than Powell is. Maybe for December in the existing Fed, we've come down, but I suspect that this economy wants to run hot and we're going to get lower rates in the future. So for a risk asset like Bitcoin, which retains some risk asset characteristics, I think that's a positive catalyst that isn't reflected in the market. The administration wants lower rates we shall have. And I suspect that's the direction of travel. We look at sentiment, which has entered extreme bearishness territory. That's probably the dominant factor here. We use qualitative sentiment around what we're hearing in the market. That's why I think there's the potential for a little bit more softness because the market hasn't fully accepted that we've moved past that deleveraging moment. But I think sentiment is a good place to look, probably the best place to look. As retail sentiment really gets to deep, there you go, it's already in pretty deep fear. Maybe if it gets into that red category, that will mark the bottom. Maybe, a handful of influencers giving up publicly on crypto Twitter. You always love to see
I'm almost in that camp, man. I'm almost in that camp. It's just like, okay,
dude, fold it in so we can get higher. I think 100K, don't look past the simple fact that 100K is a big round number and people like to sell around big round numbers. I think once we get past the people wanting to sell around 100K, then we're going to see the market going up. Look, we're in a market right now where the market aggressively punishes bad news and ignores good news. And that's a classic bear market. Eventually, we'll get to the point where the market is sort of numb to bad news. You'll see bad news happen and the market will trade sideways. You'll see the market start to reward on the margin good pieces of news in crypto. That's the moment that the cycle has switched. And maybe we start to run away from this 100K number. Again, I want to emphasize that from my perspective, I've come to view this sideways chop as a gift and not a challenge because it is giving us the opportunity to build up positions. I think going forward, people's allocation to crypto will be larger than it is smaller. I don't think this is the death knell. I just think it's a phase shift in crypto and ultimately it resolves to the upside.
How do you look at maybe some of the enthusiasm, if we do think about these things as IPOs, kind of like where the enthusiasm for everything post BSOL is?
Yeah, well, I think, again, it's going to be very differentiated by project. It's going to focus on projects with high quality fundamentals and strong community. I also think that as you move past the majors, you get into an area where the market may be ripe for disruption. You look at some of the major DeFi primitives as an example. They were launched in a regulatory area where those tokens don't have that much of a direct tie to the value of the underlying protocol. I wouldn't be surprised to see a new wave of crypto assets emerge under the new Clarity Act, the new positive regulatory environment, this new blending of securities tokens and traditional tokens that are more attractive to investors. Maybe the rise of hyperliquid is an early stage example of that, but I wouldn't be surprised to see 2 or 3 more new assets emerge in 2026, reflective of this new environment and taking advantage of the new regulatory setting that bubble up into the top 20 or 30. So of the existing alternative assets, I think there's still a few more BSOL style winners. And I think we'll see that in ETP format. But I would also look at new assets emerging that people get very excited about in 2026 and beyond. First, a DeFi index fund, the first NFT index fund. I love what you're doing on the creator side of the economy. I think that will be an emergent market. I think a mistake many investors make is ideas that sort of bubbled up over the last 5 years but didn't reach escape velocity, assuming that they're DOA. I suspect just the timing wasn't quite right, and those will all be interesting and exciting. So I'm personally spending a lot of time thinking about the DeFi area. As I mentioned, I bet there's a new generation of assets that is very interesting in that space. I think there's still growth in prediction markets that is underweighted by the market and new applications there. I think what you're doing on the creator side of the economy is interesting. I wouldn't be surprised at all to see a DePIN renaissance with new tokenomics that are more favorable and more securities-like under this new regulatory climate. Changes in regulation create entire new fields for entrepreneurs, and people who assume what we're the end of that and no new ideas can emerge. It's just all Bitcoin and layer ones. I think they're going to miss, like, if you're bored with Bitcoin because it's not offering the 1000x returns, I do think there will be those 1000x opportunities, but they'll be in these smaller sectors that are now overlooked by the market because maybe they didn't run in 2021. But under new regulation and with new sort of fast throughput, low cost blockchains, I think they have the opportunity to really accelerate. If you're asking me, do I think Bitcoin will get to $200,000 by the end of the year? What I've said is no. I think it will trade to new all-time highs by the end of the year. So I think we will cycle through this bearish market. And then I think the institutional demand and end of year window dressing will push Bitcoin back to new all-time highs. I think we'll be reimagined as a bull market again before the end of the year. But it would take an extraordinary trade to get us all the way to 200,000. I think we'll end up shy of that. But I do think we're gonna bottom out from a sentiment perspective and accelerate into the end of the year. And I think new all-time highs in 2025 are still in store.
Matt Hougan expressed that the market is mistaken about future interest rates, suggesting that despite short-term market expectations, there is a strong political push, particularly from the Trump administration, for lower rates ahead. He reported that the administration aims to appoint a more dovish Fed chair than the current one and believes the economy wants to run hot, which will likely lead to lower rates in the future. This expectation is significant for risk assets like Bitcoin, as lower rates serve as a positive catalyst that the market seems to overlook. He pointed out that extreme bearish sentiment in the market, particularly among retail investors who remain fearful and unsure if the deleveraging phase is fully behind them. He sees sentiment approaching a bottom when fear spikes and influential voices begin publicly doubting crypto, which often signals a market bottom. He noted that the 100,000 Bitcoin level is psychologically important, with selling pressure common at such round numbers. Once that resistance fades, he expects a healthier upward trend. He mentioned that the current sideways price movement is a valuable opportunity to build positions, believing that allocations to crypto will grow over time. Hougan predicted Bitcoin would surpass previous highs before year-end due to institutional demand, though he does not anticipate it reaching $200,000 this year. Regarding new crypto projects, Hougan stated growth will be differentiated, focusing on assets with strong fundamentals and communities. He anticipates a wave of new tokens emerging under positive regulatory frameworks like the Clarity Act. Matt Hougan believes opportunities exist beyond Bitcoin and major layer ones, particularly in DeFi, NFT indexes, and the creator economy. Changing regulations could spark innovation and usher in a new crypto renaissance with thousands-fold returns possible in overlooked sectors. Overall, he portrayed 2025 as a phase shift from retail-driven hype to strategic institutional growth, with opportunities for long-term investors willing to hold through gradual upward cycles. What do you think is the biggest challenge Bitcoin faces as it moves into this new, slower institutional growth phase? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.